So folks, it finally happened. I am now technically in the negative with my investing portfolio. So this was something I actually didn't expect to see at any point when it came to being negative, but I want to kind of go over some things when it comes to having your portfolio take some really big hits over a long period of time. And obviously, if you've been following along with this channel and the stock market, you obviously know that things are not looking so great, but I kind of want to give some, hope for the future, not necessarily because I can predict anything, which would be awesome if I could, but also to just kind of give you some ideas of like what other investors are doing during this time, especially ones that believe in the long-term goals, right? So, looking at this portfolio, we're sitting at about $64,643. Definitely has taken quite a bit of toll. You can see here on the graph right here, we haven't really been moving too much. And then, like I mentioned, we're actually a total of negative $2,537 in gains. And that's actually down about 12.64%. If it wasn't for the dividends that we have actually earned during this time, we would actually be negative $3,500. Now, what does this actually mean? Well, this pretty much means that on all the holdings that I have in its entirety, I'm actually down versus where I was when I first started this overall portfolio. So if we go to like unrealized gains, obviously we have some companies still in the green. Out of the 19, we have what? 1, 2, 3, 4, 5, 6, 7, 8 companies out of 19 that are still in the green. And then obviously everybody else is in the red. Now, as we go through this, one of the things I really want to emphasize is obviously this is just something that I'm doing. I know other investors out there are still sticking with, their portfolios and investing. And I think it's really critical, and that's why I wanted to make this video, especially during this time, because a lot of investors on YouTube might be sharing their portfolios when it's all in the green, things are looking great, and it's tough because if that's all you see, when you start seeing a lot of red, especially for so long, it can be really demoralizing to want to keep investing. So what I want to do is show you, right? So what I want to do is actually take you into our activities feed here. And just kind of showcase that, buying even during this time, even when you buy and the next day goes down another 5-10%, that if you're in it for the long term, 10, 15, even 20 years, you're going to be looking really well, in that time period, especially when you go back and people always say this is that they're like, well, I wish I would have bought more. Right, so you can see here, obviously dates just depend on when you're watching this, but we have a deposit of like $600, so we bought into 6 stocks. So that we have on the 6th, we did $700, we did $500 here, we did a $300 deposit, $1,000 deposit, which was a massive amount of money. One of the things I was talking to with some other people was I was actually kind of trying to hold back a little bit back in like October, November timeframe. And then once the market really started to drop, we started to implement even more money. So if we go back, let's go ahead and go to like, here's like December, for example. So we were doing like a $300 deposit, $300. I actually did $1,000 here too, $300. And where are we? $50 deposit, $500 deposit, $125. So these were like a little bit smaller amounts. That deposit was not for investing. That was actually to pay back the loan, and I think that $1,000 was as well too. So yeah, that $1,000, no, it was actually a purchase. So what happens is like when the market is doing really, really well, we tend to slow down just a little bit, and then as the market actually starts to drop a lot, we actually go ahead and go through and want to be investing more because we're buying at a cheaper price than we were at their highs. But that can make it really difficult if you don't have a lot of money to be able to deposit, or you didn't, go cash heavy when the market was doing really, really well. So one of the things I like to emphasize as well too is that if you can't be buying, that's totally okay. If ideally you can be holding onto your shares if you are believing in these companies long term, that's the way I've been doing it. I'm not selling out of the shares that I'm down on, because if we go back to holdings, you could see here, we're really down on Square, almost 57%. We're down on Amazon by almost 30%, Airbnb 27%, Facebook 23%. But I'm not gonna sell off these holdings because I still believe in these companies long term, as well as trying to buy in at these times. But again, if you can't, that's okay. Just hold on as long as you can, because honestly, the market can be stagnant for a long enough time, but at some point things are going to get better. And like I mentioned earlier, people always do this thing where down the road, we kind of have this mindset of like, man, I wish I would have bought more. It always ends up being the case, right? Obviously, doing individual stocks is a little bit riskier than if you were into, say, like an ETF, like Vanguard VOO. But let's go ahead and take a look at, let's say, Apple, for example, because obviously they're one of the most popular stocks. But real quick, before we actually go into that, I do want to quickly mention, if you are somebody who has student loans and wants to refinance, refinancing is actually entirely free, and you can actually save quite a bit of money depending on where your interest rates are. So with everything going up as far as interest rates, I want you to make sure you have enough time to check your interest rates. It takes about 2 minutes to do so, and that can actually save you hundreds of dollars, and you can use that money to invest in the stock market if you want to, or anything else. I'll have a link for you in the show notes down below. That does help support out the channel, but you get a nice little bonus as well. So make sure you check out what your current rates are if you are paying on your student loans, so that way you can save some extra money. Now let's go back to Apple here. So one thing I'd want to mention is that if you look, Apple's obviously kind of been up and down, especially with everything else in the market. But every time we have really big slopes for a while, people, are hesitant to purchase, but yet when everything is at like 52-week highs, people are excited to purchase because sentiment is that it's going to keep going up. So if you look right over here, back in 2018, we actually had, a little bit of a downturn in the market towards the end of the year. And you got Apple obviously right here at $35.55. Now that was actually after a split. Or actually before the split, if you add that in, I believe it would have been times 4 on that one. But if you actually look, down here, it took a long time for Apple to get back to that 52-week high. So where was that? About $56. So if you kind of go down through here and see its ups and downs, and then 56, where is this? I didn't actually look at this prior, but October 4th, 2019, from sometime in October, right? Looks like October 1st. So it took almost a full year for Apple to get back to its all-time high at that point. So from here all the way to right here, that took almost a whole year to go through that process. And that could have been very painful for a lot of people because, one, if you sold at this point right here, you most likely lost a good chunk of money because if you look at their, obviously that's just a little bit of a line there, but if you look at that, obviously if you sold at the bottom, that means you sold most likely at a loss at that point. But if you were buying during this time period, all throughout this whole time period, you would have gotten back to, in the positive well before anybody else did that had to just hold from this point right over here. So if you're somebody who was buying at this point and then when the market was going down, couldn't afford to invest more, which is okay, it's not a bad thing if you can't buy more, but if you were holding, you would get back to being in the positive about a year later. So if you're buying during the dip, you're going to have an advantage of getting back to in the green faster than people who are either holding, or definitely better than people who are selling at that point. And then, of course, it goes down a little bit again, goes up, goes down, goes up, and it just kind of has that nice trajectory of staying consistent and following through. Now, obviously, one thing when it comes to this is not just looking at the graphs and being like, well, if it did it before, it's going to do it again. Keeping track with, the PE ratios, looking at their quarterly numbers as well, too, is really important. So that way you can get an idea of how a company is doing long term. Because the last thing you want to actually do is just follow a company because of how they performed, not necessarily how they're continuing to perform. So when you look at numbers and you look at revenue growth, you look at cash flow, you look at everything that comes with it, like the earnings per share, outstanding shares, all the information that can help guide you on making the right decision is really important too. So those are two things to keep in mind. Just because it's gone back up before is not a guarantee that it will. It's just going to show you that there's a good probability, especially if the company is essentially making sure that they're having those impacts that eventually will keep them back at those 52-week highs and continuing to grow beyond that as well. But again, one thing you really want to keep in mind is that you are looking at the numbers, you are making sure everything looks good, because the last thing you want to do is invest in a company who maybe has done well for a short period of time, but then over the last little while has taken a huge hit and then can't recover as well, especially companies that are a little less known or not as well set in stone, like somebody like Apple, versus companies like Zoom, or companies that are maybe not as set in stone entirely. So let's go to Zoom, for example. I actually was invested in them for a little while. Did I type that in right? Zoom. What was their ticker number? Why can't I remember what Zoom's ticker number was? It was just ZM. Cool. So let's go in here. So sometimes when the market goes down significantly, it can actually completely wipe out a company in its entirety. And that's unfortunate, and it happens. But if you're invested in multiple companies, you're gonna have a less likelihood of running into big issues because you're not invested into one or two companies. You're invested into 10, 15, 20 companies. So I brought up Zoom. So this is not saying that they're not a good company and they are gonna completely go out of business or anything like that. But just something to keep in mind. Obviously, when you look at Zoom, one of the biggest things is they took a huge hit. Let me actually see where they were, because that program didn't show me. So like year to date, they're down 53%. In the last year, they're down 70%. So a lot of people are giving Zoom a really tough time. But then when you look at their numbers, and a lot of people are like, oh, well, Zoom might not make it past, if we go into a recession, might not make it past. But if you take a look, it's a little cut off here, but check out their cash flow right over here. Look how well they cash flow overall. And obviously it's gone down from their last report over in the end of January. But when you look at how they're doing in comparison to a lot of these other companies that, might not make it overall, that's something to consider as well too. Look at their revenue growth. Even after things have kind of calmed down with, working from home, they still had really great revenue growth. And then you can look at, just a whole bunch of things. Obviously, their outstanding shares have gone up pretty significantly, almost almost 3 times, so 2.7 times from where they were in 2019. But the earning per share has done still fairly well, even with increasing the amount of shares that they have. So just kind of those things to look at and be like, okay, is this company going to be here for a long time? And then you got other companies like, let's see, Carvana. Let's go right there. So here's a great example with a company like Carvana. So I know some of it's off screen, so I don't know if I can, that's going to zoom in more. So I'll click on some of these things over here too. But if you take a look, so if you're looking at revenue, you're obviously seeing a little bit of a dip here from prior months, even though, the car industry, especially used cars, were just going up like crazy. So they have that huge advantage. But then if you look at their cash flow, this company has just been cash flow negative so many quarters after quarter, like not even at one point have they gone up. So you got to consider, like, is this something that can be really detriment to a company that maybe during hard times can't recover? So you got to look at these numbers and really consider making the right decisions, following up on quarter to quarter results. And if that's something that you're like, hey, I don't know if they're going to be around for long enough, maybe I just take the L now if you've been investing in them. I actually had an investment in Carvana for a little bit under my Robinhood account. And at some point, it got to a position where I was like, I don't know if this is going to be sustainable for long term. So I ended up selling out of Carvana. And I'm happy I obviously did, especially with how much it dropped. How much did this one actually drop? Let's go ahead and take a look here. So just in the last year, it's dropped 83%. I don't know exactly the number I sold. I'm pretty sure it was around like 2 something here. So I'm happy that I did, but is this company going to survive if we end up going into a recession? That's going to be tough. Recessions can be really difficult for vehicles, or like the vehicle market in general. So we'll see how that kind of plays out. And if you are invested into a company like Carvana and you have to make that tough decision of taking the L and then maybe moving that money into a different company that's a little bit more sustainable, you can always look into those kind of things and make those decisions. But I think it's critical to come in, take a look at information, go onto companies or websites like Seeking Alpha to really kind of go in, and you can look at their financials and look at like their balance sheet and everything, which this website here does for me as well, but I like the graphs personally. So it kind of helps when it comes to seeing everything on graphs versus just on, spreadsheets for the most part. So I go through those and make those decisions with the companies that I have. So when I come in here, let me go back here a little bit. So when I come in here and then I look at companies like Square, Amazon, Airbnb, all these companies that I'm in the negative with, I got to really ask myself, are these companies that I do believe are going to be sustainable beyond the recession that might be coming up, or with this crazy inflation that's coming on. Do these companies have purchasing power or pricing power in their, sectors? Do they have an ability to kind of get out of it? Do they have like a moat where they're going to be able to, sustain themselves with their competition? And I got to make those decisions and say, yes, these are the companies that I believe in, regardless if it's going to take a year, maybe a year and a half for them to recover. I'm going to still be buying if I can. And if not, I'm still going to be holding regardless. So that way, when they do recover, I'm going to see those gains at that point. And if I want to continue holding them, I can, or sell them off as well. But I know a lot of people, and I've been guilty of this as well too in the past, where I'm invested in a company, let's say like Square, right? And even though they're down right now, actually, let me see if I can go into their section over here, because this will kind of help. Which, by the way, real quick, actually, before I do that, if you're kind of curious, this is M1 Finance. I know a lot of people do know about this, but some people don't. This is M1 Finance. I love using them as a brokerage. I will have them linked in the show notes down below. Also to help support out the channel, but you get nice little bonuses for using that. It's my favorite platform to be investing with because it helps me stay consistent and not be trying to time the market, not trying to do anything more than just putting my money in and keeping it in there for the long term. That's a huge bonus for me. Anyways, so right now Square is trading for $75. My average share price is $178.73. So I have about 17 shares. So obviously definitely paid a lot more than where the market is right now. So I had to consider, as like, okay, well, if the market recovers with this stock, because, I don't know if it will or not for a long term, but based off of what I see from the company, I do want to hold them. But what ends up happening for a lot of people when the market is this red, for this long period of time, I should also add, is that when this price gets close enough to the original share price, or usually like right at it, people are like, okay, I'm done with it. I don't want to hold it anymore. So it's going to cause a lot of that like up and down in the markets that a lot of people see, because all of a sudden when somebody gets back into the green with the company that they weren't 100% sure of, they want to get rid of it. And again, maybe that ends up working out for people, but sometimes that's not going to be the case all the time, right? Especially with those like companies that are going to be around for a very, very long time. So like if we go into Google, for example, Google right now is down at $2,200 or $2,263, I should say. So if somebody bought, closer to a peak of like, what was their 30 or 52 week high? $3,042. So if it gets back to $3,042, there might be a bunch of people that will start selling it at that point, but then we'll miss out on potentially great growth over the long period of time. And again, even if we go back, what was that 2018 situation? Where was that? End of 2018. I guess they didn't actually really take that big of a hit in 2018. But you can even see here, even with Google, they've had their ups and downs. Obviously, back in 2020, they're at 1,500 and then dropped to about 1,000. And it took them a little bit of time, but not too long to get back into that 52-week high. But again, people might have sold once they got back in the green because they felt like it might drop again. And so that kind of actually is a self-fulfilling prophecy in that regard as well, too. So it's a little different for everybody and their, methods on how they want to be investing and playing the investing game for the long term. But, again, I want to show this when it comes to, being in the negative, because at one point we were really in the positive. We were looking really great in the green, and I was showing that. So it only makes sense to show you when things aren't at its best. But what I also am showing you is that I am still investing, if anything, trying to invest more on a weekly basis now when the market is tanking, because I want to be buying the dips, even if it means it's going to keep on dipping. Because from 1 week to the next, I could be buying into these companies and, getting it at a good price point, and then it drops another 10, 15%. It's happened multiple times already, and it might still be happening over the next couple of weeks and even months. But if you're in it for the long term, honestly, that just means you're going to be getting everything at a much discounted price point, especially if you are already in the negative when it comes to the price point in which you bought it at and the price point which it is now, which means you can be dollar cost averaging, getting that value, increasing your position, and getting more down the road when things are going to be back in the green. Because if you don't believe that the stock market is going to go back in the green at some point, that also means that you probably don't believe in the US economy, which is going to be very difficult for us beyond the fact that we're just losing value in the stock market. There's going to be a whole bunch of other issues going on too. So I believe that the market's going to continue to go up at some point, and we're going to be back in the green. If you are, again, investing now, you're going to get great value. If you can't be investing more, but you're holding, I think you're still going to make it out in a great shape in the next, year, 2 years, could be even 3, but I honestly think it's going to happen at some point again. And if you're selling now while you're completely in the red, you're taking that loss and, solidifying it because you sold at that point too. So keep that in mind as you're going through this. And, if you want to let me know in the comments down below, if you're sticking with investing, I want to hear from you guys because I really, really want to make sure that people are sticking with investing. I also put up a video right over here for you on screen so you can keep on learning and growing with your investing. My name is Dennis, and I'll see you in that next video.